So I'm going to tell you guys a little story. And what I want you to do is write in the comments what is the meaning of the story and how does it relate to today's market. So let's take a look at this thing together. Two swindlers arrive at the capital city of an emperor who spends lavishly on clothing at the expense of state matters. Posing as weavers, they offer to supply him with magnificent clothes that are invisible to those who are stupid or incompetent. The emperor hires them, and they set up looms and go to work. A succession of officials, and then the emperor himself, visit them to check their progress. Each sees that the looms are empty, but pretends otherwise to avoid being thought of a fool. Finally, the weavers report that the emperor's suit is finished. They mime dressing him, and he sets off in a procession before the whole city. The townsfolk uncomfortably go along with the pretense, not wanting to appear inept or stupid, until a child blurts out that the emperor is wearing nothing at all. The people then realize that everyone has been fooled. Although startled, the emperor continues the procession, walking more proudly than ever. So I think this is an important story and sort of why I believe in education, right? You can learn from stories, you can learn morals, and you can sort of learn how to see the world. So I'm not going to tell you the answer, but I want you guys to please write in the comments, what does this story have to do with today's markets? Because I think this is a very, very important story and sort of why we study literature, you know, why we study culture, why we study these things to understand the world better. Let's take a look at this, guys. And again, I want to hear your thoughts on the story because I think it really, really matters. This is big news, actually. Binance, look at the headlines. Binance is strongly leaning towards scrapping the FTX rescue takeover after first glance of the books. And so this is, we've been following FTX for a long time. I've been warning people like this for, I don't know, like since like May. So about 6 months, something like that. And I was the only one telling people that, you know, watch out for this Bankman-Fried. He's a scam. Watch out for this whole thing. And I'm telling you guys, it was real. CNBC was pumping up FTX every day, going, "Oh my God, this guy's so awesome. He's gonna be like JP Morgan," and you know, all the YouTubers were pumping up this thing. And I'm just telling you guys, it was all a scam. And you can decide who was right, but it's looking like I was right. One of the things that I will say is it's interesting because things must be a lot worse than even what Binance thought. Because we'll read this together. I think it must be really bad over there. Cryptocurrency exchange giant Binance is highly unlikely to go through its proposed acquisition of struggling rival FTX after less than a day of reviewing the company, according to a person familiar with the matter. So they looked at the books, less than a day reviewing the company. I mean, it must be something like looking at, you know, AMC stock books or something like that, to where like, oh my God, I think this is all fake. It's pretty nuts, actually. You can read more. But Binance's non-binding letter of intent for takeover announced Tuesday as FTX's financial position appeared to be spiraling out of control, hinges on Binance performing due diligence roughly half a day into the process of reviewing FTX's internal data and loan commitments. I think that's key. Loan commitments has led Binance to strongly lean against completing the transaction, the person said. Binance declined to comment on the current status of the proposed deal. FTX also declined to comment. So, you know, this is coming from a source familiar with the matter. So we don't know who's saying it, but it is being reported, and the markets are sort of probably spooked on this. This is a huge thing, right? And it may turn out the emperor has no clothes. You know, we'll see. My own personal opinion, I don't touch this stuff. I think it's radioactive, and I've said for a long time, I think the markets won't bottom until crypto finds the bottom. And who knows, maybe we're getting much closer to that, because this is a major development, you know. The one thing I will say, which is really important, guys, is I get it. There's a lot of kids out there that say, oh, you know, buy the dip, buy the dip, buy the dip, everything goes up. You know, most people out there these days, and it's very real, you know, they're like 20 something. Some people are teenagers who watch YouTube and write comments. Some people are children, and I'm being really serious. I've seen comments on my channel, and you click on the profile, it's a child. You can see from the videos it is not hard to figure out. And you know, this is thing that with people without experience, they think that, oh my God, everything's so easy, it's so great, and you can ultimately get burnt by this kind of stuff. And this is sort of why I was putting out these warnings about FTX for months, because for people who are new to the market, or people, say who are YouTubers who are young, who get seduced by essentially the money, and have no trouble and no problem cheating their followers, because why not? It's a lot of money. These kind of things can happen, and I just don't trust this stuff, because I think the main, sort of the main concern that I have is, do you really think governments are going to go along with this thing that could potentially be massive tax fraud, could be lots of money laundering, could be currency for criminal activities, all these kind of things. I just didn't see it, and I get it, guys. If everyone's going along with it, everyone's drinking punch at the party, might as well be drinking the punch too, right? But at the end of the day, you find out what the ingredients are, and you're like, oh my God, how did we all get sick? It happens. Other things going on in the markets too is, we're waiting for CPI data, and it's interesting. As I saw this headline, and this says U.S. inflation likely to post another sharp increase in October, CPI to show. So we'll see. I personally, right, I've said this before, regardless of what numbers show, whether we're in official recession or not, if you're losing your job, you're already there. And I look around, the grocery store is expensive. Every time, my wife and we just went to the grocery store just yesterday, and it's like, things are just so expensive. So if official numbers are like, oh yeah, everything's fine, everything's great, look at the prices going down, and like we go there and we're like, I don't know what you guys are talking about. So that's sort of what you got to weigh it for yourself. Is, yes, there are official numbers, and yes, there'll be an official declaration of recession, but your own personal situation, you'll know, are housing prices going up or down where you live? Are rents going up or down where you live? What about food prices, car prices, etc.? And how's your job security? Because essentially, if we're all feeling insecure in our own lives, right? We're just one small part of a whole market. But how are the people around you saying? And this is the kind of thing I want you guys to use your own best interest on these, or best. It's in your own best interest to trust yourself in these things. That's the best way to say it. Now, to be fair, on the fair side, yes, there will be a bottom out at some time, but I wouldn't expect, even if we bottom out, to just be this crazy rebound, because I don't see stimulus check money coming in the way the government, propped up the markets last time. I just don't see it. But you can certainly have your own opinion on that. Also, too, bond yields. I'm just looking at this, Treasury yields. 2 years at 4.65, 12 month is at 4.72. It's like, why even bother with stocks when you're like guaranteed everything's over 4%, and the 2 years still above the 10 year. That signals recession, but these are all above 4%. Also, too, like I was mentioned before with job cuts. Now Zuckerberg, it's interesting. He's showing a bit of humility here. You guys can read the headline. Meta to cut 11,000 employees, right? 11,000 jobs. Zuckerberg says, I got this wrong. And then they're essentially the 11,000 employees. That's 13% of the people that they're firing. So I warned you guys about this for months in advance as well, that you don't want to be in tech. Actually, it was a year ago that I told people that. I said, hey guys, get out of tech, go into dividend stocks, get some defense, get some food stocks, get some energy. And I get it. It's not fun, right? You want to go hang out with the young 20-year-old YouTubers and like, oh, no. Netflix is the future. Get Netflix. Maybe guys, I really get it. And it is what it is. If everyone is drinking the punch bowl and it seems like it's a great time and everyone's having a party, right? Why not join in? But ultimately, at the end of the day, the music's going to stop, and you have to identify, when that is, and you want to be ahead of the game, not late. And so one of the things I've noticed has been a trend of people like, trying to pretend like they got it right, but most people were drinking the punch bowl essentially. The other thing is too is I thought this was kind of interesting. This is in the UK, and they are talking about here how people are canceling their loans. It's really quite interesting. Basically, people are backing out of deals, and this is the most since the Lehman thing, so what, 0809. Basically, the money's not there anymore, right? People are not so how to say, willing to jump into risk, and also too, this could cascade. So we got a lot of broken deals, the same way that the Binance deals are broken things. So do not in this market, in this world, do not count your chickens before they're hatched, I guess, right? And don't count your loans until the money's actually there. This is a real thing. Now, to be fair, there's someone over at JP Morgan saying, hey everyone, this is the worst it's going to get, time to buy. I was just showing you just a counter. So not everyone is saying, the sky is falling. They're saying over JP Morgan, hey, the sky is falling, but I like it. And you got to do what you got to do, right? So that's why I'm showing you guys a contrarian. I still remain bearish myself, but yeah, sure, there could be opportunity now. Interesting thing is, even though today the markets are down, Meta is like up quite a bit. I think, this is just, like I said, just to be fair, I mean, Meta has a PE ratio of 9.85. So, it's trading at a much more reasonable valuation than other companies in terms of crazy tech companies. And that's a question you got to ask yourself is, do you think Mark Zuckerberg can pull this off? And are these layoffs going to help the company to trim costs to ultimately be profitable? They're still going to be dumping a lot of money into those headsets, the Reality Labs, the metaverse thing, but they may pull it off, and that's for you to decide. I can't predict the future in that. I personally, I know that Facebook is, a profitable company. They do make money, but we're going into a slowdown, into a recession. Advertising will be cut, but you got to make that bet on yourself, and I can't tell 10 years from now whether or not it's going to work. It is what it is. But to be fair, though, like I said, even if it works or doesn't work, yes, Meta Facebook at least is not at the high. I mean, it's down 68%, right? So, and it is a legitimate company. Whereas like something like this, like your AMC stock, which is basically a clown stock at this point, down 9% today. Jeez, crazy, right? 87% on the year. What can you say? You just laugh. I mean, and I get it. Some people are going to be hurt by this thing, but I've been warning you guys for well over a year on this one, and it is what it is. Bitcoin is down big today, and it's rebounding a bit. As I started recording this, it was at 17,000. Now it's at 17.2, down 74% of the year. And my opinion is we won't find market bottom until this finds bottom. So where that is, I'd love to hear your thoughts on this thing. It is certainly a lot of pain this year, and don't expect it to rebound anytime soon in terms of yes, even if it does hold, don't expect it to triple from here in the next month or two. It's just not going to be like that. Something that's interesting is Tesla. It is 44% down, so about half. It looks like the markets are rebounding a little bit as I start recording this, but we'll see. We're still all red across the board, and we're waiting on CPI data, also waiting on election news, and essentially kind of what we're going on with this market uncertainty today as well. So I think you got your FTX craziness plus your market uncertainty is happening. Some people ask me, it's like, hey Chris, what stuff do you like? Well, the problem is, guys, and I'm being real, bonds are so good right now. It's like, well, why even bother mess with stocks when you get 44% downside? I give you an example. So, Realty Income is a pretty stable stock. If you really have to buy a stock, I'm just saying, for example, this is one. So this is a dividend stock, right? They pay a regular dividend every single month. The problem is that the dividend yield right now is 4.65%, right? And you can get a bond for the same with no risk, where this one does carry risk. So it's just why mess with this stuff? But yes, you do want to stay diversified, have some cash, have some bonds, and have some stocks if you like, and you got to weigh it in. What's the possible risk to reward? So could there be more downside in this one? Sure, of course. There's downside in any stock. This is the last 5 years, up 17%. So it's generally a pretty safe one. It's going to give you a dividend. It's a dividend player. But like I said, the thing is right now is this. It pays you the same as basically a bond, so it's hard to really be like, hey everyone, jump in the stocks. Same with a Johnson and Johnson. These kind of things. Let's see, the dividend is not that great, 2.59, right? And it is up on the year. This is one of the industries that have done well. Healthcare will always do well. They're always going to make money because we need to buy this stuff. But also, to be fair, it is a stock just like everything else. And when one thing crashes, could be a lot of things would be crashing at the same time. So there's still risk in all of this stuff. And dividend at 24, it's a bit high for something like this, to be honest. So it is what it is. There's not a lot of attractive stuff out there. So that's why you don't see me out pushing stuff all the time. And this is not a ton of attractive stuff. But I'm just showing you the chart of sometimes for these kind of things, you got to lower your expectations. You're not going to quadruple your money in 1 year, this kind of thing. But those kind of days are gone where that crazy clown market is still there. And the last one, someone asked me about GSK. Yeah, if you're interested in stocks, this might be one to think about. They had a disappointment with their cancer drug. I saw that. But PE of 4, dividend of 5. and it was beaten down quite a bit. So this is in the last year, it's down 25%. So it's not like, you know, a terrible bet to take. But generally, overall speaking, I'm fairly bearish. However, to be fair, you know, when you get into scary news about FTX, I mean, we're getting closer to that point to where, like, yeah, I mean, you're certainly getting a bottom out, but how long will it take is anyone's guess. So anyway, I'd love to hear your thoughts on these things. And again, please write in the comments, what is the meaning of the story that read in the beginning? I think it's important to understanding today's markets and important to doing well in this world. So thanks again, everyone, and I'll catch you in the next video.